Urs, excited to be back with you for the Swiss View. What are we seeing from Switzerland in the world, the economy, and some movements? What are you looking at right now?
We are still confronted with conflicting data, especially coming out of the US. We have some more ease when it comes to the geopolitical conflicts, but then on the other hand, we are also having some more pressure when it comes to the whole tariff situation.
Yeah, absolutely. I mean, if our listeners were not aware, on the 1st of August, Trump came out with Switzerland with a 39% tariff, which we've talked about the possibilities, but
Yeah.
it is interesting to see, it was kind of a big shock. No one was really expecting the tariffs to go so much higher, but they did. But you were pointing out something really interesting to me on the first day that the tariffs took hold.
Yeah, the interesting thing was that markets actually went up. And the issue we are confronted with, especially from an economic perspective, is that not the listed big companies are affected the most because they can shift their supply chains however they like, or at least most of them, depending a little bit if you have any restrictions where you have to produce. But otherwise, you can shift it. But if you're a small company, then you're kind of screwed. And that counts for Swiss companies, but also for US companies. In the US, you have small companies or mid-sized companies that are privately held that represent about 49% of the employees that are active in the US. And they don't really have a chance to go or work around it. And so if they want to still to function and to produce and to offer their services, they have to import the tariffs, and sooner or later they have to pay for that, or the end client has to.
Yeah, and I think the fascinating kind of point to that is often there's a lot of trying to conflate the market with the economy and how things are going and where effects are seen. And some people say that the market shows more real time than the economy because a lot of the data is lagging for the most part.
Yeah.
But I think a huge point to understand when you talk about small and mid-sized businesses is the size of that market. And in the U.S., I think they employ roughly 60 million people.
Yeah.
And those companies are importing upwards of close to $1 trillion worth of goods. I think it's around 800 or 900 billion worth of goods. So that's not a small portion. Yeah, okay, the U.S. economy is huge, and there's 330 million plus people, but that's a huge portion of your population.
It is.
And
indeed.
I think small and mid-size in the U.S. make up almost 50% of the private market employment.
That's correct, yes. And so when you have the businesses who start to struggle sooner or later, then eventually you also have the end consumer who starts to struggle, because if you start to doubt on the future employment you have, it also has an impact on your financial situation and then how you spend your money.
Yeah, and those companies are competing against those large corporations as well. So it can shrink. So where the big companies can handle kind of these tariffs, I mean, especially in the situation of Switzerland, where you see larger companies like pharmaceuticals weren't really affected.
Mm-hmm.
Well, that's Switzerland's largest export, but there's a lot of other exports that Switzerland does that is in the small and mid-sized business, and a lot of fine, high performance manufacturing, luxury goods, things that are absolutely needed for the world supply chain or businesses in the U.S. I was having a conversation with someone who was telling me that he had people he knew directly that were affected by the tariffs. They were in the U.S., small business owners in the U.S., immediately impacted by those tariffs. And so, yes, it looks like a plunge on Switzerland, but there are absolutely effects going to be felt in the U.S.
Yeah, I'm confident that this will be the case.
Yeah, and so I think that's kind of looking at, what's happening around the world. We see in the U.S. some of the economic data trending in a more inflationary pattern, would
Right.
say. What do you see when you look at currencies around the world, when you're looking at U.S. dollar, where it's been moving? Because we see interest rates moving some places. The UK brought down their interest rate, even though inflation ticked up slightly.
Yeah.
But at the same time, the US has held steady, and the Great British Pound hasn't fallen back against the US dollar, which is a usual move that would happen if one central bank is lowering interest rates, the other one's keeping a bit higher. Then there's usually a movement.
I mean, it was quite the opposite. The British pound even strengthened against the US dollar. But let's stay at the inflation area for first, because in the US, the inflation number CPI was pretty much stable. Core inflation ticked up a little bit, but then a couple days later they came up with the producer, the
Producer's Price Index.
Yeah, the producer price index, which ticked up quite a bit, like 0.9% month over month in July, and 3.3% year over year. And the producer price index is a leading indicator for the CPI, the consumer price index. And so there you already see some signs that inflation is probably going to tick up a little bit. And as you mentioned, in the UK, you have the same situation, but nevertheless, you have central banks who are starting to lower interest rates. And we are going to see with the Jackson Hole meeting, which is coming up this week, and the speech of Jerome Powell, how he is discussing this topic and how much hope there will be from the investment world and from the current government that interest rates are coming down.
Absolutely. And I think that's, how do I say it? The Jackson Hole Symposium is always the one respite the American people get from the Federal Reserve every year. But it is going to be interesting where they kind of see it heading. I think the last time I saw markets or investors are pricing in like 96% chance that they're lowering interest rates at the next meeting, which is very high. There could, you see precedent around the world with the European Union, who has been lowering their interest rates, although inflation is not perfectly at their target. The UK as well. Japan is an interesting situation to see, okay, they have very low interest rates, and they're right now kind of the only country that gives that data that says, okay, you maybe should raise your interest rates.
Correct, yes. And on the other side, we also have China, which just came out last night, our time now, where the People's Bank of China held rates steady, even so they also have issues and there is some pressure to reduce interest rates. And so, and another point I want to bring up regarding the Royal Bank of England is that for the first time forever, I think it was like, for the first time, there has been 2 rounds of votes to come up whether they lower interest rates or stay steady.
Yeah.
And that has been like a first, and very interesting to see how difficult it is also for the national banks to evaluate the current situation.
Yeah, absolutely. And where there are and I think kind of what ties it in again to the tariff game that's being imposed around the world is those do have effects. There's a lot of push. People are against tariffs in the U.S. push against tariffs because they say we'll pay the price. Yes, but at the end, both people will end up paying a little bit more, and so that's, I think, part of the conundrum that a lot of these central banks are in, or with the U.S. being such a large piece of their trading partner for their country is, well, there's a little bit of uncertainty. Okay, UK has a deal, and EU has a deal, but how strong will these impacts be on their sectors, on the businesses? Where's that inflationary pressure going to be placed on their country, on the US, in the middle? There's that uncertainty for me is what seems to be kind of holding things, I would say, when you're that is making it so tough.
It is indeed, but on the other side, you also still have hope because Scott Bessent, the Treasury Secretary Treasury, he said that he expects by the end of October that there will have final negotiations. So there is still hope that even the existing tariffs are going to be reduced at some point. And that's also one of the reasons why the markets are not that impacted yet.
Yeah, and I think that's in trying to navigate what these tariffs are. How much are they trying to affect the value of a currency? Are they for better deals? Are they for leverage politically, or country positioning? There's a lot of angles that can be taken and looked at how they're being used. But I think seeing the effects is creating a difficult field to navigate when you start looking at the international perspective of what we're doing of international markets, because in the US you have all-time highs essentially at the stock markets, except for maybe some tech stocks that have in the past couple days kind of retreated. But there's kind of some, like, you have all-time highs in the US and companies valued much higher than their running average, let's put it that way.
Yeah.
And then internationally you have countries trying to navigate a tariff situation but have been undervalued and had been positioned to grow well as profitable companies. And do you have any thoughts there when you kind of look at, okay, where's the US going, and where are those sectors headed compared to kind of the international field?
Yeah, I agree that the markets have been pushed to very high levels, and that there is a lot of pressure to keep going. And I think that's also where a lot of pressure is coming from the current administration and like other investors for the Fed to lower interest rates. And there have been some changes made in this regard. But you're correct that other markets are also very attractively valued, or more attractively valued. And so the question really is, where does the money flow? And just recently, we had the CEO of ChatGPT, Sam Altman, coming out warning of an AI bubble, which also led to the sell, or to a certain part to the sell-off, which we have seen. So, for example, a company like Palantir, which trades at the price to earnings ratio of over 200, which means it takes more than 200 years to earn enough money so that it justifies the price, has dropped by 10% yesterday without any fantastic new news. I mean, there has been no announcement made, but people become nervous, and so we do see that investors are starting to reallocate again, to look, okay, where does it make sense to be positioned in the long term or in the midterm, until we have more clarity towards what the central banks are going to do.
Yeah, and I think in general, the fragility of markets you can see, or even sectors. When someone who comes out who's not who's in the field, is kind of a leading voice, makes a statement and things react.
Yeah.
Now, that doesn't mean that panic should hit. People should take time to think, breathe, speak with their financial professional to understand, how they're investing. We're certainly not, making investment advice here, but you need to take a moment to really think about, why are things moving the way that they are? Is this a shock? I mean, it's kind of like buy the bad news, sell the good news mentality. But it shows the fragility of investors, of how scared they are, already kind of understanding when they look at, a high valuation and go, yeah, but it's the thing. I'll chase the momentum.
And I think they're right for being worried about the situation.
Yeah.
And we have the same situation. You mentioned the US dollar and where it goes a couple minutes ago. And we have people like Stefan Miran, who is coming into the Fed committee. We have Scott Bessent, who we talked about. They are both huge fans of a weak US dollar. And that's also something, especially as an international investor, you have to take into consideration when making investment decisions. Because if you get into an investment that gives you a good return of 10% a year, but the US dollar is going to lose 10% in value against your home currency, then you will be flat.
Yeah. Yeah, and that's always the challenge of when you go international, is finding the right markets, like not just the right investments, but the right markets, the right currencies to be working with in relation to what your domestic currency is, where you're living, where you're spending, where you're paying your bills, where you're thinking, where your family is, and that matters. And it's something that's kind of shocking when you consider where the US dollar has fallen since the beginning of the year, and it's kind of stayed pretty low. And it'll be interesting to see with these two people coming in. I mean, the Treasury Secretary, who's already there, fan of a weaker dollar.
Yeah.
A new Fed member is now a fan of a weaker dollar. And, seemingly right now, Powell has been trying to hold the line with higher interest rates. But if interest rates fall and inflation goes up, I mean, does the dollar, where does it go from there? Yeah. Historically, what we look at is further down.
I agree.
Great. Urs, thank you so much. Really appreciate it today and look forward to doing this again with you.